Good afternoon. Welcome to the weekly Livestock Market update. I am Brownfield Anchor reporter Meghan Grebner, with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Happy Dairy Month to you. It's June. We always talk about bacon and steaks and summer grilling season, but have some ice cream this month and enjoy and celebrate June Dairy Month.
For sure, those dairy producers want us to celebrate June Dairy Month. Just as we've talked about some lower prices for especially things like pork, it's been a tough ride for dairy as well, and they could use some help in terms of consumption at this point.
Just enjoy all of the great agricultural and dairy and meat products as well. Today, we're going to talk Restaurant Performance Index. We're going to talk a little jobs, and we're also going to take a look at quarterly trade outlook from the USDA. But to kick things off, let's recap what I would say is a pretty impressive week in the markets.
Absolutely, Megan. It's some good news when we can talk about prices this week. We start with cash-fed cattle up $3.60, and the stories of record prices came yet again this week. I don't think that's the last time we'll talk about record prices before we kind of eventually talk about supplies rebuilding, but certainly positives. On the feeder cattle side, feeder cattle auctions this week, we're going to call them 3 to 8 higher again this week, but we had a pretty light test given it was the Memorial Day holiday period, and some of those auctions did run early in the week. On the futures side, some strong futures moves this week. The August live cattle futures contract was up $8. And the August feeder cattle contract was up $7.85. Choice box beef also went higher this week, up $5.10. Ribs and loins certainly were some of the big drivers of that higher choice box beef price. Barrows and gilts also higher this week. Cash barrows and gilts up $1.30. The strength in July lean hog futures contracts up $9.65 is some welcome sights for hog producers for sure. Pork cutout value also gained this week, up $2.55. We had strength across the board in all those components in that pork cutout value.
I think looking at, since I have been in this role at Brownfield, so the boys are 5 and a half, almost 6 years, the amount of business I have seen and at the prices I have seen on both the cash hog side, just the jumps, and then that direct cash cattle business this week has been wild. I mean, it's been crazy.
So you raise a good point. So volatility is good and bad, right? This is the good of volatility. So we want to take advantage of these times when prices are jumping to put floors on. So thank goodness we're talking about some higher prices. And yeah, we have a ways to go on the hog side before we're going to talk about profitability, but it is good to see these opportunities come up. And I will say, the cattle in particular, I think we have higher prices ahead. That doesn't mean we don't want to protect the downside risk yet again. Take advantage of the opportunities to let somebody else have some of that risk at least.
Risk management is probably my top phrase for the 2023 year, just in general.
I hope it's on everybody's mind, and I always will say out loud, risk management does not necessarily mean record prices or record profitability even. It's this idea that you want to let somebody else bear some of the risk of market moves instead of you bearing all the risk.
Singles and doubles, right? That's what we're looking for. A higher batting average, higher on-base percentage, not dingers and home runs every single time.
But singles are my favorite.
I was going to make a dairy joke in there, but I won't. All right, let's take a look at weekly slaughter numbers. Obviously, shortened holiday week. There's been a couple of days where they're trying to maybe make up a little bit, but definitely down from week ago levels.
That's right. USDA is reporting for the week ending June 3rd a run of 573,000 head of cattle. That is 52,000 head less than where we were last week and 35,000 head less than where we were a year ago. On the hog side, a light run as well, 2.033 million head this week. down 333,000 relative to what we ran last week, and down 11,000 from the same period a year ago.
Talk to me about those year-over-year numbers. How are we running?
Yeah, so on the cattle side, we're back up a tick to down 3.4% year to date. And on hog slaughter, we're 1.3% above year ago levels.
We're going to talk quite a bit on the demand side of things as we look at some of these reports this week. Restaurant Performance Index for April came out. Talk to me a little bit about the number, but why we're focused on what this does in terms of consumers and maybe how it relates to consumer confidence as well.
Yeah, so we did get that Restaurant Performance Index out. It declined 0.8% in April relative to the previous month and relative to the previous year. So a little bit lower. I look at the components of that index. The current situation index was down 1.5%. So it's the current situation that has been slow to move higher, and that makes a number of 4 or 5 months in a row where we've been talking about a current situation that's going down. So same store sales, customer traffic, labor costs have all tended to be moving in the wrong direction. The expectation side was also down in this report, but just down slightly when you look at April relative to March. So perhaps folks can look ahead and be a little more optimistic. Maybe this is the second half of 2023 is going to look better than the first half, as maybe some better economic news helps grow demand, and that demand ought to translate into stronger beef and pork prices and demand levels.
Jobs. Speaking of demand and thinking about a positive note and maybe some improvement as we look to the back half of the year, a pretty impressive May jobs report again.
Yeah, that's right. So 339,000 jobs reported this morning. In that jobs report, that was well more than the 190,000 of the pre-report midpoint for jobs. And so it's always interesting when we start talking about all this volatility. So jobs report, jobs report better than anybody anticipated, which then gets us to the next step of, well, the Fed's going to raise rates. They might have otherwise not raised them in June, and that looks like we've increased the likelihood they'll raise them. Let me just say, I'll take more jobs any day. Yes, we have inflation to worry about, but more jobs, more money in pockets, more meat consumption. I think that's all a good thing. And yeah, we want it to be moderated, and we don't want a lot of inflation. I will say, when you look at the report, our average hourly earnings up 4.3% on an annual basis. That was actually slightly below the midpoint of pre-report estimates. So maybe we're seeing a little less inflation in those wage rates, even though the overall jobs number was better.
My next question was going to be, how are wages stacking up when we're thinking about the inflationary increases? Are wages maybe not necessarily matching them, but keeping enough dollars that consumers cannot have as much of a shift in their basic purchasing?
Yeah, so I think it just reminds us that we are tightening still, even with a really good jobs report. When you think about what people are getting in terms of take-home pay, yes, it's gone up, but gone up slower than I would have several months ago. And I think that overall helps us. And I will say the unemployment rate actually went up. Went up relative to the estimate. So 3.7% is the unemployment rate. The pre-report estimate was 3.5. So, not all of that suggests that perhaps we get a lot more inflation going. But again, more people working, more meat demand. We'll take that at the end of the day.
Before I let you go this afternoon, we're going to talk quarterly trade outlook. While the jobs report might be a silver lining to a out, that quarterly trade outlook from USDA kind of is a downer when you look at those numbers.
Yes, I will say it is negative. All right. But I think we need to put it in a little bit of context here. Export value in fiscal year 2022 was $196.4 billion. When you look back to fiscal year 20, it was 139.7. So we had a really strong increase in that export value in fiscal 21 and fiscal 22. USDA is now saying for fiscal 23, we're going to decline to 181 billion. So that would be a little more than a $15 billion decline in export value. And they said relative to their February estimate, that FY23 number is 3.5 billion lower than they thought it was going to be back in February. So we're lower and we're moving, and USDA's revising lower. None of that's exciting. Now, the flip side here for a minute. So ag import values. Here's where USDA is telling us fiscal year 23 is going to be up $4 billion, which says we're going to import 198 billion and export 181 billion. So we went from fiscal 22 being net positive 2.4 billion to now being net negative 17 billion, importing more in value than we exported. So although exports came down, imports went the other direction. All of that's not great for us. Livestock, poultry, and dairies had its fair share as well of the decline. A lot of that's beef related. So USDA lowered the overall livestock, poultry, and dairy category by 1.2 billion for FY23. Most 0.7 of that 1.2 was beef and veal.
When we look at this quarterly trade outlook, obviously revised from February forecast or updated, how much does it position us, or what are we watching for in the next quarter to see what USDA does in terms of these values and the outlook in general, and how that relates to what happens for our producers back at home and on the ranch?
Yeah, so I think this is really critical for what's demand in the rest of the world looking like, what's economic growth in the rest of the world looking like. You look at the numbers here, and all of a sudden it looks like we're the best home for some ag products, where we wouldn't have been as much that leader back, especially go back to fiscal 20. And so we're going to have to watch, I think, what's happening in these other economies around the world, and then the competitors as well. You know, who's shipping us product? What are those products that's coming in the United States that's growing in front of us? I think right now all of this is telling us our competition in the rest of the world on the supply side is getting better, and demand's also then weaker for our products moving outside the United States. So hopefully we switch this around a little bit, and we start to see in the second half of 23 a little stronger demand pull from the rest of the world as well.
Well, we'll get an update on monthly trade data next week. Also, June supply and demand numbers come out. What are you watching for on maybe just on both of those ahead of next week's reports?
Yeah, so I think on monthly trade data, for me, it's a lot more look at what's happening on the beef side. We've been a little slower in a number of cases. Do we continue to see some growth continuing to unfold in pork exports out of the United States? And does that happen in less traditional countries, I guess, for us, or some of the smaller countries who we've been seeing a lot of growth in pork exports? So I don't expect a lot out of June WASDE. We're getting ourselves all lined up for the June acreage report that comes at the end of the month. And I think, although there's a lot of concern about weather and dry weather in many parts of the country already, I don't expect USDA to do anything quite yet in terms of yields, but you and I are going to get to talk about this a lot if we continue to see lack of rainfall in some important parts of the country.
Planting acreage was what, June 30th is when that one comes out.
That's right.
There will be a lot for us to ponder and pontificate on for the next couple of weeks.
And I will say it, although we're talking livestock markets generally for pork producers in the second half of this year, whether we can climb out of a lot of the red ink that we see today, I think will have a lot to do with where feed costs go as we get to this fall.
Scott, always great to see you. Stay cool. I know you're in some warmer temperatures, right, this week?
That is correct. And no rain, unfortunately.
I sure hope you get some rain. We're dry and hot here as well. So we were out having to start to water everything. It's been pretty dry here as well.
Let's hope that's not the start of a trend.
They keep saying El Nino. I am holding out for some cooler, more comfortable rainy temperatures over the summer months. Scott, we will see you next Friday.
Sounds good.
Our weekly livestock market update delivered your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happens during the day in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.